Hey, it's Wayne from truthaboutmortgagerates.com here with another update from the mortgage world. Pretty much the past week or so, we've seen rates stay fairly steady. After the big move down, we saw rates try to slide back up a little bit. Again, had a bit of selling off in the bond market, which is typical, expected. And then we saw rates try to move back in again. Now, they really haven't made any big moves. It's just been little by little, but bond prices have continued to improve, which again, trying to bring rates down a little bit. Only making very, very small moves because we're really bumping up against some resistance levels with bond prices moving higher. And I really think at this point it's going to be difficult to see prices move much higher, rates moving much lower without some other kind of influence coming in from outside. Now that could be the government's coming in to buy more mortgage-backed securities, which they've committed to do, but they haven't really started in any earnest here to see that happen. So we could see that happen, or get something from the outside, kind of from the stock world. That could be one of the things here, like this Madoff Ponzi scheme, which has now been exposed, or beginning to be exposed, for losing billions and billions of dollars, massive amounts of money. But what this has to do with bonds and mortgage rates is that this is now a couple of things. Going to potentially shake the confidence of investors in the market. And your average investor is to be putting money with anybody. Are they going to start pulling money out? Now, there's been a lot of hedge fund and more mutual fund redemptions going on over the past weeks and months that has really driven stocks down. And as we've discussed before, that it hasn't helped rates much because basically managers have to sell anything and everything. So when you're selling, prices don't go up, they go down. Bond prices go down, rates move higher. So we see that as a potential issue if this is going to continue to force more redemptions. More money coming out of the stock market can typically would be good, but when there's so much selling going on, people, they're looking to sell anything and everything. They're not just going to be selling stocks, going to be selling bonds. So when hedge funds can particularly have to be selling everything, it drives prices of everything down. Now that's something we could potentially see with this. And that's one of the things that I've mentioned is everybody seems to think, oh, you know, they mentioned that rates may be going into the middle of the fours and they're going to be going lower. Yes, they could, but a lot of things have to come together to really see that happen. First of all, you need to check out our report in Truth About Mortgage Rates at truthaboutmortgagerates.com. You can check the link out over there. Check this out here. Really to tell you, have you understand really what goes into mortgage rates. This isn't just, oh, someone makes it up or they're going to go there. It's market and things have to happen in order for that to go on. So with that being said, one of the things here they're looking at, again, is if the market's going to be selling, it's going to be very, very difficult to see rates move a lot lower. Even with the government coming in, again, if they're going to be buying, that's going to typically driving prices higher and rates lower. But if it's just offsetting the selling that's going on because of other redemptions, you may end up seeing rates stay the same. So what that means is maybe looking at, again, rates not going as low as everybody thinks unless we get all the pieces coming together. If you don't have that, we may be looking at rates staying around this point, which is still going to be great. But there's a lot of people out there waiting to do something because they think they're going even lower. But then a couple of things you need to think about. Number one, if you don't have any clue about what really makes rates go down, then you guessing they're going to go lower is just like throwing a dart at a dartboard. Frankly, that's easier. Number two, are you prepared for any type of refinance? Do you have your house in order? Do you know what kind of value you have? You know, what kind of rates do you have? Do you have more than one mortgage? Are you a blended rate? Do you need to take some cash out? Are you prepared for this downturn that we're looking at? Are you prepared to be able to take advantage of opportunities or to set yourself up what if you lose your job or your spouse, or you lose a second job, or you lose overtime? Are you prepared in a cash situation and in a payment situation for a situation like that? Some of the things you need to be really thinking about as we're moving forward here and to be able to take advantage of this situation. What if there's a possibility that you may lose a job? Are you going to wait and say, oh, I want to squeeze out another 1/4 percentage point in rate and then all of a sudden lose out because now you don't have a job there? Or again, or a spouse or someone else doesn't have that. So some of the things you want to think about, but first thing you got to check out is really what the heck makes mortgage rates go up or down. That's where Truth About Mortgage Rates comes in. Click the link over there. Check it out here. Truth About Mortgage Rates. Get the truth before you start to do any of this stuff. That can get you going from there. Again, until next time, it's Wayne from truthaboutmortgagerates.com. See you then.